on you. Oh, my joy in the eyes of blue. Oh, I'm running for the city. I got the new boys in my blue.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different.
Okay, can everyone hear me okay? If you want to put in chat that you can hear me just fine. Roger, Roger. Okay. So what I thought we would do is open up the conversation because I want to have this Q&A. If you have a question, let's type it in the chat, and might even just open up for open forum as long as we can not talk over one another. Couple things. So I'll start off with ENVX. Just this news that came out. I was just chatting with somebody about it, that Raj had hired his son, you know, and my response to that was, well, as long as it was an outside committee or an inside committee that Raj was not involved in. But it's not a good look at this point, nor is it not a good look for it not to be released by IR, and it has to be found because somebody's watching a Raj's son's LinkedIn page. So not a good look. The second thing, obviously price is breaking down. What I'm looking at on the chart though, that is, if I look, I don't take a joy in the stock going down. And if you're new, that's something that's super important. This is not enjoyable to me, meaning this. You know, I'm not sitting here celebrating and saying, ha ha, look, I have puts, I'm making money, and you're, no. My desire is to help everyone make money, okay? So I'm pointing this out, though. We're seeing institutional selling is increasing, and we're seeing this. Tomorrow, this is going to update, and this is going to be even more institutional selling. This was a minor test today of this gap. Here's what my concern is. I was just chatting with somebody who was in the OEM space, very high level, and in lithium batteries. And so he brought up again with me that the issue is there are always delays, always. And many times those unplanned delays are not the company's fault. For example, as let's say an OEM is testing out their battery, they've gone to the point where they're doing form factor testing, right? And they send the changes back to ENVX, and ENVX says, okay, let's do this. We'll make the changes, sends it back. And the OEM said, well, let's add another change. You just don't know. So, but when you invest based on a story, there is the tendency to sort of have a blind side to anything that is anything other than the company goes out of business, right? There are risk levels between I'm going to make $1 gazillion and the company's going to go out of business, okay? So when I look at ENVX here, you know, it really pisses me off. I started calling for the IR to be changed back in November of last year. And then I sort of toned it down, but you know, they replaced their IR. They didn't announce it. The new IR didn't announce it. The guy who they brought in was at a company that was in worse shape than ENVX is. I mean, it is like, what are you doing? Understand why IR is such a big deal to me. IR, a authentic, real IR firm is going to have relationships. They're going to represent other companies. Business is about relationships. Okay? Now, I could be wrong, and ENVX says we don't care because we're going to get a sovereign fund, and we're going to get. I don't know. Perhaps the possibility of either one of those is the same. I don't think so. So And I think we're going to see that with EOSE. But with ENVX, it really angers me because the stock shouldn't be back down here. There is no reason the stock did not need to be back down here. Every time they announce something, the next day they figure out a way to kill it. Okay. So now the good side of him hiring his son, or ENVX hiring Raj's son, is I'm no longer really concerned that, I had three options for Raj's planned stock sale. I'm not really concerned about option 3 anymore, which is, option 1 is he needs the money. Okay. He needs the money. He took a massive pay cut. So he needs the money. Option 2 is he wants to get some of it out now because he thinks it's going lower. Option 3 is he doesn't care, or he's an idiot, or he's a criminal. What is the most likely out of those 3 options? The first one. We can't prove it, but you have to look at what is most likely. So I look at that and I'm like, well, yeah, now with his son there, makes it even more unlikely that the bottom part, the third one. So I'll get to that, Riza. Thank you. So from a stock standpoint, what happened is every time the investment community was given a reason to get excited, yes, right? They kill the momentum. Well, when people are talking about what the shorts position is increasing, why wouldn't it? No offense, but if you look at the price chart, and you accept the fact that 90% of the damage in this price chart is the company's fault in terms of how they communicate, yeah, you should be short. They're doing your work for you. Okay? They're doing their work for you. So, and now the problem is shorts are not what reason would they be afraid that it's going to cover? Right? They're pressing. If anything, they're pressing. Why wouldn't they? Look technically, look at the support levels it's broken through. This is a big deal. If this gap closes and it loses $6, you're starting to talk about getting to a level where, while there is no law against a mutual fund holding less than $5 stock, some mutual funds won't. And you might start getting into, well, they're on the NASDAQ. Now you won't get into a listing issue. So anyway, I believe that ENVX stock is going to go down. I believe it's going to test the gap. And I believe that if at the same time the market is having a tantrum, ENVX is going to make new lows by the end of this year. Only one thing is going to stop it. They got to release some update of news on something. Update something. Okay, your last news release, or your last time you communicated with the public, it did not go well. So they need to do something. Otherwise, the stock is going to continue to drift down. So the other thing I noticed, I made a note of it yesterday. Yesterday we had, I think, 3 attempts from the lows in the S&P and the Qs. I noticed that the first time ENVX followed it, but the second and third time ENVX didn't even follow the market back up. It was, it's showing weakness. So the boogeymen that are out there, it's not the market maker. They get paid no matter what. Remember, if you here's the thing, casinos rarely get caught cheating because they don't need to cheat. Market makers don't get caught cheating because they don't need to cheat. Why? Because they're buying things at the bid and selling them at the offer. They don't care. Okay? So, and he hasn't been around for a while. We have a former market maker. He was one for 20 years. And he has said, because I asked him open forum. Have you ever seen a market maker get in trouble? He goes, never. 20 years, never happened. So, okay, so I think that ENVX worst case scenario is if the gap closes, if the gap closes, it's not going to just all of a sudden come to a halt. Okay. The next natural place to stop is this 616. Well, $6, even number, $6. So from 616 to 6, this price needs to stop. If it doesn't, yeah, we're going to get a new low. Right. How much of that is algorithmic? Well, here's the problem. When you have big things like gaps or possible all-time lows, okay, those data points are used more by more algorithms. You're triggering and alerting more algorithms. So it's just, anyway, a news release, like I said, I think would stop it. And I don't think the news release has to be anything particularly great. Just a generally upbeat, positive news release. That's it. So that's where I am on ENVX. You want to talk about ENVX, or do you want me to go on to EOSE? Closing the gap. So right here on 5-1, the high range, so the high of the day. On the very next day, price opened and created a gap. Gaps, my belief is that price moves from level to level. Okay. Why? Because that's where there's data, meaning there have been previous battles here. Okay. So gaps, there's no data. It's a gap. So price will tend to get in there and trend very quickly. That's what a gap means. Oh, let me go through these questions. Okay. So would it be safe to say that we are ending tax selling season? No, not yet. At least historically from my standpoint. Now, this is meant not in a arrogant way. I didn't have a lot of tax selling. So, but we would do it like in the last 2 weeks because, okay, here's where it does come important because of that whole, well, you sell. This is proof that I literally haven't done tax selling. You can't buy it back, right? 30 days or something. So you time your tax selling at the end of the year. Now, here is one thing that maybe you know, but most people don't know. The end of the majority of mutual funds fiscal years is October 31st. So the Santa Claus rally is a lot more due to those mutual funds who will do window dressing, which means they'll sell their crap and then window dress their portfolios with the winners for the year, like NVIDIA, stuff like that. So they look good in their top 10 holdings, because that's usually where retail will stop reading. Oh, yay, they got NVIDIA. Yeah, but you're down like 12% for the year. Yeah, but they got NVIDIA. Seriously, I mean, that's what most retail will do. So they know that. But then all that money's got to go back to work too. So, no, I think we're a little bit early for that. And I don't think that most guys that are underwater are sellers. I think that people who are underwater are believers. Let's say IR did a great job and the market stayed high. Would the leftover price gap lower possibly never get filled? But since IR sucks and the market is down, the chances of the gap getting filled is high. Yes and yes. First question, would the leftover price gap, if it doesn't get filled now, could it stay as never filled? Yes. Yes, it could. However, there is a high probability that it will get filled. People always ask, what's a high probability? I would say 8 out of 10 gaps get tested. And then I would say 3/4 of those get filled. So what are we at? 57%? IR sucks and the market is down. Yes, because now the problem is price is entering that not as if it's battling there. It's entering it as it's gaining speed, which is shown by the range, daily ranges, as it's gaining speed to the downside. Does that make sense? This thing's speeding up. It's not slowing down. Yesterday was brutal. Okay. Yesterday, the bulls spent a crap ton to try to get that price up there. They did a good job. Didn't hold. And when I say bulls, when I say bears, you have to understand something. It's like a hive mentality here. Okay. I'm not saying somebody's flipping a switch and going, go long, go short. They're not doing that. Okay. Because you have bots and algorithms that in the instance it takes me to make this statement, they've run 100 trades. Bots and algorithms are trying to, well, mostly bots are trying to push or pull and see if they can attract. Okay. But they all use different formulas to evaluate whether they're attracting, and different bait. I mean, that's where it gets complicated, right? But we don't know ultimately what their programming is, but we do know what to look for, where their fingerprints are. And that's what I'm talking about when you look at these price levels. So yes, it made the chance of the gap getting higher. Yes, you're on mute. No, Circus. You're more interested in EOSE. Does the new IR? No, it doesn't. But the company that he came from, I forget, it's Maxon. The company he came from, the stock was worse. Now, that's not his fault. But what I'm saying is, my gosh, go do an upgrade. Why are you hiring? Why aren't you upgrading that position? It's not going to cost you a crap ton more money. Thank you. 30-day watch sale rule. Thank you very much. What do we think the odds are that a customer is announced this month? September? I don't know. They got to announce something, or the stock's going to continue to drift down. Here's what I'm worried about. And this is for you long-term holders. And this is why, really, please learn how to collar. Let me teach you how. I'll do it for free. Okay? Why? Because if people in the industry are telling me, and we've heard this before on FinTwit, that there's always delays, unplanned for. Delays equal more time. More time equals more risk. Okay? So while you're waiting, first of all, your original thesis has changed because you're being forced to hold it longer than you wanted to. Okay? But number two, you're adding more risk, so why not get paid? And you could do that with collars. And people say, well, I don't like collars because I could get stock called away. Uh-huh. How's that worked out for you? So anyway, I don't know what those odds are. I will tell you that they said that, was it second? Was it revenues first half of, I got to look it up. It was revenues first half or revenues second half of 2025, because that's what I'm looking for in a customer announcement. But, oh yeah, here's one of the problems with the customer announcement though. They can't make a customer announcement until the customer approves the prototype and all that engineering and all that stuff. I'm just saying, I fear that's going to take longer than people are thinking it. No, I don't fear it. It's going to take longer than you think. So be prepared. Okay. With October's end of year, thanks. Okay. ENVX, any catalyst to move this back up once? If, yeah, easy catalyst. Announce here. You don't even have to announce an order. And here's the problem. I don't blame this on ENVX guys and girls. But here's the problem. They can't even name their possible OEM customers. Why? Because their OEM customers are at some stage in the evaluation process. If you're an OEM, one of the 5 out of 6 top OEM smartphone manufacturers, are you going to name that you're testing new battery technology? What are you going to tell the current supplier? right? Uh-oh. So I get that. So my point is there's something, it is beyond NVX's control. I understand that. That's why I haven't been bitching about it. I get it. What I am going to bitch about is if you all don't adjust your timeline, though. Okay? Don't adjust your time frame, your timeline for investment later on. That's reactionary. Be proactive. Make the decision now and say, okay, you know what? I'm going to give this thing 12 months. I'm going to give it 18 months, whatever it is. Number two, tell somebody else. But anyway, how can you tell it's speeding up on the downtrend? Due to 3 candles down. Yep, that's one. 3 candles down. Number two, I'm seeing it in this MACD histogram. Okay, so think about this. This MACD histogram is built off of 9 days of data. In order for this to show, okay, the momentum, the amount of selling relative to the whole volume for that day has to be so great that it not only has to register, well, has to be so great so as to overcome the previous 8 days of average. Huh? Does that make sense, Joe? Wait, no. Shaner, does that make sense? So that's primarily the way I can tell that momentum is speeding up. I can also tell it here, which is down here. There, you can see it better. See it? Boom. Okay. You can see this too. Institutional selling is incrementally growing. But you don't want to see that. Okay. Joe, I want to make sure I answer your question too. Yeah, well, we know they're cooperating with 5 of the top 6. That's just smartphones. Okay. So we know that. We have a good idea who we thought was the VR. Still could be. But they still can't name. I mean, it is one of those chicken and egg things, which is the OEM's got to have confidence that it works in order to announce that it will be a contract. But in order for it to have the confidence that it works, they got to keep testing it, and we'll never know the results of those tests or any delays. Yeah, there we go. Maxion Solar. Thank you very much. It's a penny stock company. Do you know who you deal with penny stock companies? Yeah. They're not the best investors. I've seen video on collars before. My question more pertains how you determine the strikes in the call and the put and what you do when the expiring price is moved. All great questions. I'm going to give you the quick and dirty. I set my call strike at least farther than one standard deviation move. I calculate that move, and then I set my call strike beyond that. Why? Because I don't want to put it in a high probability range. Put it outside of that. Okay. I use whatever premium I can get from that strike to go, and that will decide which put I'm buying. I want to go close in, as close as I can in. The maximum length duration is really 40 to 45 days. Why? There's a theta cliff at about 21. I want to enter that cliff as soon as possible because that theta is going to decay the value of that call option. You want to set the put as close as you can, just in case you get a price spike down. Gamma will help accelerate the price increase of the option contract. Okay. Should you just take your medicine now, change the timeline now? NVX is going sub 8 tomorrow. Yeah, you know what? I don't know if it's going to do that because I don't know what the jobs and I don't know what the recovery is, and I just don't know. But no, you've got to evaluate. Okay, the worst thing to do in sports or in work or in arts or in music is to remember your last mistake. Just remember this. If you no longer believe is a high probability that for the length of time you want to own this stock or have leaps, that you are going to make at least a commensurate amount of money, twice the amount of risk you're taking, then no, you shouldn't own it anymore. But you can't look at it like focus on, oh, it's a loss, it's a loss. No, you can't look at it like that. It's trading. Okay? So if you still have belief, then you have to, again, know three things. What's your stop, what's your target, and what's your time frame. Now, you may sit there and go, how the hell am I supposed to figure that out? Well, that's my point. That's why why I tell you, don't marry these things. Just date them. They'll tell you the right time, okay? Well, at least a high probability time where dating them is not going to result in you just wrecking the car. Sorry for the bad analogy. How does one determine one standard deviation away? You have to know the formula for, you can Google it very easily. Any other questions? Anybody have comments before I got into EOSE? And this one I'm going to need, you'll hear, I would like some expertise. Okay, we're going to go into EOSE. Here's where I'm at with EOSE. I believe the DOE loan that it really has to close by Thanksgiving. Why? Because the federal government sort of goes to shutdown mode in December. It doesn't mean that nothing will get done, but it does mean unless it's at the top of the heap, it's probably not going to get done. I am concerned about this newspaper article coming out of Turtle Creek with, I'm not concerned about that, the companies may unionize. What I'm concerned about is the press part of it. Now, I've read some of the comments that he's being very judicious and very gracious, saying all the right things. However, here's my concern. If they're forced to negotiate with a union under a collective bargaining agreement, is that a trigger point for the DOE to review? So if it is, that's a problem, because it could be a delay. Okay. If it gets, look, also from an optics standpoint, I don't think you want to be the federal government and loaning money to a company that is going to be viewed or possibly is viewed as a, union hating, because so far that's sort of how they've tried to portray them, by the way. They're being accused that, the people who joined the steel workers or were in the steel workers got fired. So that's huge. That's it's breaking multiple federal employment laws to do that. So it's just, and it's bad optics. So they're joining the USW. Okay, thank you. So what I'm looking at, I'm still up quite a bit. And those are the leaps. But I am not thrilled with this closing below here. I still believe $2 is the limit. But I am getting, depending if I get this answer or not, I am getting a little bit concerned that I'm going to give too much back on my trade. So, however, if I close the trade, it doesn't mean that I am short EOSE, because I think inevitably what's going to happen, hey, thanks, somebody got me a blizzard. Yeah. I think what inevitably is going to happen. So I think the DOE loan's got to close by November 15th. I think that's going to trigger the closing of that large 965 KMVH, whatever it is, project that Cerberus brought and is handling the financing for. That's what I think. So I think that I think we have a very high probability of getting news by November 15th. Here's the problem. I think we also have a high probability of other stuff happening by November 15th. So market may be overwhelmed, market direction may overwhelm. Who knows? But just a possibility. My price level is still $2. Anything under $2 is a bargain as far as I'm concerned. I've taken some time to think about the whole issue of Cerebras having 33% of the company, and you got free warrants. They can sell those. Well, it depends on the vote, but they can sell those in the open market. They can convert and sell. Okay, that's a big overhang on the stock. As I thought about it, I thought about the possibilities. Well, okay, here's one possibility. They do it because they want to remove 100% of the risk and 100% gain. Let's say their loan becomes effectively a gimme too. It's a riskless transaction. However, they also gain the reputation for screwing their own clients. They also cut off the cash cow. And one of our members brought this up, of what appears to be a burgeoning business for Cerebras to line up financing for the projects for EOSEs. I think the only delays would be, well, outside of the overall market, the only other delay to the stock moving, okay, is going to be if this union negotiation, whatever, either gets bad press, worse press, or if it triggers and I'm going to try to find out it'd probably be a carve out reevaluation. And hey, Mr. White, assuming that they hired a banker that maybe has, a tenth of your experience, would they look at the fact that a good portion of the workforce just got unionized in the collective bargain? Would that be a trigger point for a reevaluation? No. Okay. It is being recorded. All right, cool. So nothing to concern about? Unless you think it'd be a DOE issue. Not an issue. Cool. I'm just reading what Mr. White is saying. Mr. White comes from a banking background, and I'm being modest. Perfect. All right. So the only other thing that I could see is a delay of the announcement of the DOE loan. I don't believe that extension was a standard extension because it was in a 6-month or a 12-month. It was directly to the end of this year, so I think they believe they can get it closed. I don't believe so. I don't believe so. I think, I don't know if you all saw that just crossed the wire, but there was a lithium battery farm somewhere in California that one of the grids caught fire and they're shutting down part of the town. A big part of it, actually. So far, all we've done is we have completely retraced this wonderful big green candle that was like a mini short squeeze, yeah? They can no longer, Cerebras can no longer own 49%. They missed that. And if EOSE misses a milestone, all the other ones get canceled. So this is a big deal. All right, so where do I think we could go? Here's my price targets. And this is all dependent upon whether we stop right here, which doesn't look like it because look, we're entering the middle of the battle zone, or we stop at this 216 level. We don't stop at 216, 2.8 to 2 becomes fairly quickly. Okay. However, all of this can be undone with one fell swoop. And that's the announcement of the DOE getting done. Okay. This, to me, and why I was oversized, I've already scaled out, okay, and taken 100% of my risk off the table. I think I did. I get them mixed up. I believe I have. When I look at the price chart on EOSE, there is a lot of blue sky above us. before we run into any type of real strong price discovery. Okay. So, how high can this go? I think if they announce if they time it correctly, they announce the DOE, assuming that we test that 216 level. Okay. If they announce the DOE, I I think immediately the stock is going to be trading between 75 cents and $1.50 higher. So from the current, let's call it $3, call 3 to 350. Okay. That's just off of that announcement. But if they time it where they announce the Cerebus financing is done for that big customer, oh my gosh. Effectively, what they've done there is completely proven out the front end of their business model at that point. So that's a big deal. I think that's where you break over 4.5, and I think that's where price probably gets away from it, where you get the algorithms involved, you get the bots that only look for those types of spikes, but it's about timing. Realistically, I think we could end the year, depending on the announcement. I mean, I actually think they can announce 3 customers by the end of the year. I got to that number by assuming they will close. One of them will be the Cerebus one. Murdy asked the question, does anyone believe there'll be any information at the upcoming special shareholder meeting, or is it strictly for the 2 items shareholders are voting on? Yeah, I don't know if there'll be an opportunity. I mean, yeah, I honestly don't know. Yeah, I've actually never. Well, no, 3 companies I went to their shareholder meetings, mostly because it was very early on in the business and I was really poor. They had really good buffets. Totally telling you the truth. All right, so that's where I'm at with EOSE. The greatest downside risk right now for EOSE as a company is lack of execution. That's it. Lack of execution, which is exactly where you want to be with a company if you're going to bet on it longer term, right? You don't want any of these other risks because risks are not additive, they're compounding. Okay? If your primary risk is just operational, that means you don't have ancillary risks such as, I don't know, capital, right? So for a longer term investor, it's a great spot to be. Now, if you don't have it collared, I look at this and I'm like, there's still plenty of time to collar the thing. But you do want to try to pick a day where it's a green day because you're going to get more for your calls and pay less for your puts. But I don't think we're there yet. This is really interesting though. Very odd. Big burst down. Big burst down. If this thing breaks here, this is sort of a big deal. I'm going to put this here. Here's my thinking. I'm putting an alert here because of this. Right here. We had a pennant. That's what this is. It's a pennant flag. And we just did it again. However, today ruined it. If we break through this, we're in danger of undoing all of this. And it has nothing to do with the company. I don't think the stock's going down because of the company. I think the stock's going down because it's gone up a lot over the last 2.5 weeks. Okay, cool. All right, so here's what we got working against it. I got slowing, very much so, buy momentum. However, the institutional buyers are still in control. Okay? So I don't think this is the start of something bigger. I think this is to me, this is more of an opportunity. There's nothing that I'm perceiving that would be coming out of the company. There's a higher probability that good news comes out of the company than bad news. Let's put it that way. So, I if we get a big market huge old puke, $1, just $1. So, all right. Any questions? Anything? It's in real time, actually. So they are doing they're in real time. They're constantly calculating what their P&L is. They're and how close it is to their benchmark, what it's supposed to be. And so they're fine tuning their algorithm. One of the things that you get into with any complicated programming is curve fitting. You actually may end up programming it, but it's no longer neutral programming. You've done it in a way without knowing sometimes to bias it so that it delivers the results you want to see from a modeling base point. But bots and algos, first of all, bots don't plan. They're not saying if I can push, I can get this percent. They are constantly testing, what the momentum is, the acceleration of price, order flow. I mean, it's sometimes thousands of variables. Okay, so they're testing, but at the same time, if enough of them are moving in the same direction, they'll jump on too. Algorithms are reactive. Okay, that's why you hear a lot that algorithms are used in the dark pool, because algorithms work like this. So when you put an order in the dark pool, the question they ask you is, all right, let's say Microsoft, 408.39. So they're going to say to me, hey, you got 10,000 shares to sell, 408.01 to 408.19. I said, yeah. Then they're going to tell me, okay, we're looking at the VWAP, literally, I kid you not, institutional desks, they like obsess over that VWAP. And this is the range it's been. And what do you say? And I'm like, okay, what do you think? Well, I got a buyer wherever. You decide the price before you go into the dark pool. And a lot of times they'll have a buyer lined up for you too, or the opposite side of the trade, by the way. So, so again, algorithms are reacting though, right? They're not in that pool trying to sell that stock. Okay. They're trying to fake, right? Even in the dark pool. They don't want to spike the volume in there. A lot of the volume in the dark pool are range trades, by the way. I'm sorry if that was too long and too, what's the word? Too verbose an answer. There's a very limited amount of bots that are sitting out there hunting for retail. I mean, it's not exactly like it's a target-rich environment, right? Computing power. So back in the day, there was no co-location of servers, and so very smart people figured out, hey, you know what? There's literally like a couple millisecond difference if the office is in New York versus if you're in San Francisco. So they all co-located. Then they figured out it made a difference like the last 10 feet. Then they figured out people were cheating by having their literal, effectively Ethernet cord. They had shortened it somehow. It's ridiculous. Okay. So when you ask, how did they get that edge to screw over the other bots? Well, remember what a bot is constantly doing. It's constantly reviewing specific data points. If one of data sets, if one of those data sets is, hey, find me a pattern that seems to happen every day at the top of the hour. They're looking for some pattern. This is very basic. Okay. But again, you're not talking about a particularly target-rich environment. It's much easier to screw over If you're a firm, it's a lot easier to screw over a mutual fund guy than it is a go after another bot. But yeah, the reason why the Citadels and why those guys make so much money has to do with leverage, ability to hide losses, ability to be the market a lot of the times, and sheer computing power. Sheer computing power. Why would a company try to compete with institutions who have better computing power? Because there is no program out there that has discovered every single inefficiency that can be taken advantage of in the market. The problem right now is that the institutions are cheating. They've rigged the game. How? They get cheap money, free. They can gamble it. If they gamble and lose it, they don't go out of business and nobody goes to jail. Okay? They can continue paying themselves exorbitant bonuses while the average man is, at the very least, doing no better. They are bereft of any sense of moral decency. CEOs, the banks, major corporations. All right? You know, when you, how do I put this? I think when we look at the market, we have to understand something, that retail is only here for liquidity. Okay? That's it. I used to say this to clients. Retail is the flea on the tail of the dog, right? And so there are bots that can carve out a specific spot, but again, it's an arms race, literally an arms race. None of these bots give a rip about the direction of the market. None of these bots care about the economy. None of them. That's the whole point. There's no investment. This is one of the big philosophical discussions, but they don't care. And retail truly is a necessary evil. If they could somehow figure out how to separate retail's 401k money from them, ability to be invested in the companies, they would do it. What I came down to, for me, what I, at my base level, my understanding is that, numbers are universal language, and it's something that cannot be argued. 2 + 2 still equals 4. Otherwise, computer programs, all the programs would fail because they are built at the base level, a 1 and a 0, right? On and off. So at the base level, it is binary. Therefore, their programming, they have a very hard time being adaptive. So the way they trick you into thinking they're adaptive is by shortening the time frame and what their reaction is. But their reaction is also modeled after previous behavior. I mean, it's really rich to see JP Morgan, Jamie Dimon, this last thing with Basel. What was it, Basel 3? The new requirements that he was able to get whittled down from 25% reserves. It's like, you're going to get down to like 6.8. Institutional buying is happening in the EOSE, but it's dropped off. Unlike ENVX, which is all selling. And sellers are in control. And this chart hasn't been updated as of yesterday or as of today. It's closed. Is there not a long bias to the market going into these job numbers? Is there not the expectation that these job numbers are going to help correct, stop the fall? Am I wrong? Oh, yeah, it is. But that's also why I went out to the 26s, because they were so much less to go out. It also tells you where they think when the event is too. Also, nope. I'm going to say, it's really interesting. There's no drop off in volatility. Interesting. Oh, wait, I was looking at the wrong one. Yep. There's a drop off in volatility. Look at this. It's halved. Now, all that means is there have been more call buyers than put buyers in total. Will you give your thoughts on the Tesla chart? Yeah, sure. Oh, look, I got alerts. Look, I did put that graphic in the room the other day that Tesla was one of the 3 stocks, maybe Chevron, Texaco too. There. Remember, there were 4 stocks that were in the most unrepresented in portfolios. institutional portfolios. So I think there's probably some of that going on, but I also think it's been one of the few greens in a otherwise shaky down market. We, look, this is where battle zones and battle lines come in. Price didn't just magically stop here. Okay. You get up in here, you're actually, all of this is happening to close this gap. Oddly enough, hey, look, it's at, almost at the 50% level. Okay. Just as I teach. So that's not like, hey, look at me, I'm so smart. No, it's more of, hey, I'm not bullshitting you. Okay. See you, Sealer. See ya. So on Tesla, it appears as though this thing wants to go higher. Here's the problem. Jobs report. The jobs report has been made to be such a level of importance. Again, literally for the first 15 years of my life in the business, not 10, I had no idea these reports are going off. Not only me, other people in my firm would be like, what? So whatever. I mean, they were too busy watching MASH or whatever they always had on TV in the trade desks. So now, I'm going to look at the weekly on this. Weekly is in a buy. You can see this big old resistance up here at 271 daily or monthly. Wedge. It's the tightening range. You see it? I hate drawing lines because then people, you use trend lines. No, I don't. But when I do, I'm honest about it. There we go. Here's how this works with algorithms. I've been asked this question. There are algorithms that have these trend lines programmed in. Okay. And if price breaks above or below, they are triggered to test to see if there's additional sell volume. But that's not them trying to drive the price down. So everyone says, the bot's trying to drive it down. No, they're not. They're not. Okay, they're like in that movie, Finding Nemo, when they got in the Gulf Stream. They're trying to jump on, okay, catch the wave, so to speak. So here's what's going to go on with Tesla, Mr. Shaner. 262. This is next month range. 262.50. 8. Now, next month, remind me, and let's see how close we are. Okay?
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping, just saying.